All customers who had deposits in these banks can rest assured, I want to rest assured they'll be protected and they'll have access to their money as of today. No losses will, and this is an important point, no losses will be borne by the taxpayers.
And President Biden there laying out the administration's emergency measures after the rapid collapse of two major U.S. banks. The government, as you heard, will guarantee all deposits at California's Silicon Valley Bank and New York's Signature Bank, even those not insured. But he says there will be no bailout for the bank shareholders or investors. The president insisting the banking system is safe despite the rising concerns.
LaSalle Network's Tom Gimbel is joining us now with a little perspective on all of this. First of all, hello to you. Thank you for joining us.
Always good to be with you, Lourdes.
All right, let's look at the big picture and what this collapse means for the tech sector in general.
Well, I think what you've got is a lot of companies that have been pre-profit, some pre-revenue. When you hear venture capital backed, Series A, Series B, and the like type of funds, it's because the companies aren't profitable, so they're raising money to fuel their growth. And there aren't traditional banks that are standing up to lend money to companies that don't have a way in the foreseeable future to pay it back. Silicon Valley Bank was one, thus the name, that really focused on these pre-revenue, pre-profit driven companies. And that's why their loan portfolio wasn't snatched up by some other bank, because it's not a desirable portfolio to have, because the odds of them ever making money are very slim.
So what do you think will be the domino effect here then? How will this affect people who work in this segment of the economy?
So what I think will happen is the government is taking care of all the people that had money in the bank, and they're going to be the backstop for that. But what will end up happening is companies will be able to make payroll now for this week or next week, but they don't have access to the Silicon Valley Bank line of credit. So that means they don't have any money in addition to what cash they had to keep their companies going. So my guess is over the next 30 to 60 days, we'll start to see some of these tech companies in their early to mid stages that start to lay people off, if not go insolvent and bankrupt.
All right, but I mean, we look at a lot of these startups, these tech companies, there is money to be made in that industry. So I would think another bank would just swoop in and try to help them, but you're saying that's not the case.
Yeah, it's like betting on the horses, Lourdes, is that if you think you know what you're doing, you may be able to gauge the risk factor, but if you don't, and it's not a type of business that you normally go after, to jump in now and try to become that lender is not really that great. Now remember, if you look at what their loan portfolio was and where they ranked, and there's a ton of information out on the internet about this, is that it didn't mirror what a lot of traditional commercial banks' portfolio looks like. So that's why they grew so fast and why they had the business. They focused on a specific sector that had a hard time generating loans based on their business model, and they would pay a little bit higher rate, and they would have different terms. And Silicon Valley Bank ran it a little bit differently, and their balance sheet wasn't as strong as some other banks. Thus, they're in the situation that they're in today.
Well, let's broaden it out here a little bit. Tom, tell me what you think there's been a big effort made to reassure Americans, but for those who maybe don't have a lot of money in the tech sector or work in that part of the world here, but what do you say to those who are nervous about their money that's in the bank?
Yeah, I don't believe there's a systemic risk across the banks, because the majority of banks don't do this kind of lending to this portfolio almost solely like SVB has done. Most banks, especially the ones we have in Chicago and around the country for that matter, have strong balance sheets, especially since the 2008 financial crisis. And they've lent money to profitable companies that run their businesses in a more traditional way, and that's not the case. We've just grown up on a generation of folks that think that to have a company that doesn't make profits is okay, that eventually if you get enough eyeballs, it'll work out. I don't believe that there's systemic risk in the banking community beyond the two banks, maybe a third that was really leveraged this way. So I think that the financial system will be okay. The real challenge we have is the government backing all of the loans? And I think that's what we've got to look at, of the type of industry we want to have, that the government is always the backstop, because that'll create a policy where banks can do whatever they want because they know that the government will always be there. And I'm not sure that's really where we want things to go, but time will tell.
That's a debate that
Yeah.
people are having right now. Okay, LaSalle Network's Tom Gimbel, thank you for joining us today.
Good to be with you. Stay
We'll
safe.
talk again soon.
All right, see you next